Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, October the 2nd. The year's 2024. Let's talk trading statistics. These videos are for educational purposes only. Your results may differ from mine. Okay, I've been mentioning statistics, and almost every day when I make a video, there's a chart and there's usually some type of statistic or measurement that I use to make decisions in trading. And probably one of the biggest decisions you have to make is what pair to trade. If you're trading Forex, and if you're trading stocks, it would be what stock to trade. Now, there's two ways to go about it. And most traders, from what I've gathered and what I've seen, is they come up with a method and then they use it on everything. Everything they trade. Where I've taken a different approach. And I've been doing this for decades now, at least two, where I find which instrument, or in this case Forex, which pair or pairs work best with the method. So the first approach, I always like to tease and say, you give a baby a hammer and everything becomes a nail. It's like, yeah, you give a trader, a squiggly line and everything becomes a mess. But yeah, you squiggly line users out there, I just like teasing you, but I used to use squigglies. I guess I went to Squigglies Anonymous. Squigglyholic Anonymous. Anyway, okay, enough with the bad jokes. So, in trading, you make money when price moves away from your entry price. If you're short, if it goes down, you make money. If you're long and it goes up, you make money. So, one of the first things I would look at is, what's the daily range of a particular pair? And I probably want to pick a pair or pairs if I'm trading more than one, which I usually advise against, gives me the best opportunity in terms of range. So you can see here right now, over the last 100 days, for the pound dollar, it's given me 100 pips or more 21% of the time, or 21 days. So then I look here, more than 50 pips, 72% or 72 days. So that's not bad, but let's just take a look here. You can see that the dollar yen, something I used to really like to trade a lot. Right now, frequency distribution says that's a better trader. And if we look at the pound yen, you can see much bigger range. But in the case of the pound yen, a lot of times the spread's bigger and it can move so fast that it can just rip the the, the money right out of your account. But it offers opportunity. And the thing is, even with this low range though, once you get in tune with whatever you're trading, it doesn't matter as much. But starting out, you would probably want to look for something that has a big range. Now, that's just overall, but what kind of trader are you? For example, if you're a trader that likes to trade breakouts, what you might want to do is look at something like high minus the previous high. So in this particular case, difference greater than 0, that means between 0 and 10 happened 57 times. So out of the last 100. So that means it broke out about 57, it broke out 57 times. So you can see right here today, you wouldn't have gotten the breakout trade yet. Yesterday, you would have gotten previous low minus low. So that's on the other side of the fence for going short. So looking at statistics, got an average, middle, mode, the maximum, which means it's going the opposite way, and then the minimum. Oh, actually I was wrong. No, the minimum is going the opposite way. Because this is previous low minus low, so that's going to be a positive number. So those are two things I look at, and so that's the breakout. Now, one of the other things, I guess a kind of a rule of thumb, is if price is above the open and it hasn't hit a certain range, then chances are it's going to keep going up. And if it's below the open and it hasn't hit a certain range, chances are it's going to go down. Of course, you have to trade in the moment and see what's happening, because there's always pullbacks. And so you might want to do a high minus open, which you will probably recognize as a buy zone trade. Whoops, I didn't do something right there. I think I hit the wrong button. High minus open. So you can see here, 91 times out of the last 100 days, you had high minus open greater or equal to 10 pips. So that's why when I do these videos, I'll talk about the daily or weekly open, because the statistics show those crossover, or that particular crossover, can give you the opportunity to make pips. And so you have to realize what statistics tell you is it's giving you the opportunity. But you as a trader have to take it, whether it's 1 pip or 5. Now, I know I've been talking about gun to your head, you have to make 5 pips. And that video will come up. Unfortunately, Walmall is still under the weather, and I was kind of hoping for him to come back so we could do a series on that. So I might just have to put out the video, then we can pick it up when he comes back. So here, open minus low, you can see, once again, 100% of the time. 66% of the time, you can make 10 pips or more, or you get the opportunity to make 10 pips or more. So, those are statistics that I like to use. And as I mentioned before, let's see. We look at the wick zone, and 70% of the time, price leaves the wick zone. Price just doesn't like to stay in the wick zone. And you can see it right here. Gets in the zone, comes out. Gets back in, comes out. It's in the zone right now. And we've got a 12 pip range here in this lower wick zone. And we'll just have to see what happens, but oh no, we've got a much bigger wick zone than that. I was thinking, I didn't see the minus sign there. We've got a 47 pip wick zone. So we'll have to wait and see if price moves to that. And then the other ones, how many times did it go in and out of the top, in and out of the bottom, through the bottom zone, and through the top zone, or no zone. So sometimes price would just not even go into the wick zone. Or actually, it would close here. So, fellow traders, those are just some of the statistics. And those, I think, I would say are the main ones. You can always get into the minutia, but it's best to keep it simple, right? I mean, sometimes you have to practice what you preach. And just remember, doesn't matter what statistics are, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.